Let me ask you something. Have you noticed how we barely catch our breath between major events these days, from health emergencies to banking troubles, from supply chain disruptions to geopolitical tensions? It's like watching dominoes fall in slow motion. But why? That's exactly what we're going to explore today. Let's start with a pattern that's becoming impossible to ignore. Remember when news cycles used to have peaks and valleys? Now it feels like we're living in an endless stream of emergencies. But here's the key question: is this really random, or is there a deeper system at work? Consider this: just as nature has seasons, economies have cycles. But what we're experiencing now isn't just another cycle, it's a fundamental restructuring. And it's happening globally, affecting everyone from Wall Street bankers to small business owners in rural communities. Now, let's talk about something that affects every single person watching this video: money itself. The US dollar has been king of the hill for decades. It's been the backbone of international trade, the language of global commerce. But things are changing, and they're changing fast. Saudi Arabia, a longtime partner in the dollar system, has started accepting other currencies for their oil. This might sound like a small detail, but it's like removing a crucial brick from a carefully built wall. The implications? Massive. Think about it: when the world's biggest oil producer says, we'll take other currencies, it's not just a business decision, it's a seismic shift in global power dynamics. Here's something fascinating: throughout history, every single currency that wasn't backed by physical value has eventually failed. Every single one. Our current system, built on debt and promises, is showing the same warning signs that preceded previous currency collapses. But here's where it gets really interesting. We're not just dealing with one currency's problems, we're watching an entire global financial system strain under its own weight. The debt that fuels our current system has reached levels that would have seemed impossible just a few decades ago. You've probably noticed your grocery bills climbing. While recent numbers might suggest inflation is cooling off, don't be fooled. This is like the eye of a hurricane, a temporary calm before the storm returns. The central bank's attempts to fight inflation through interest rate hikes are like using a Band-Aid to treat a broken arm. The effects of these policies take time to ripple through the economy, and we're just starting to see the consequences. Here's something that should raise eyebrows. Since 2002, America's central bank has been buying its own government's debt. Why? Because other buyers aren't stepping up like they used to. This is like a company buying its own products because no one else will. It's not exactly a sign of strength. The Treasury bond market, once considered the safest harbor in financial storms, is showing cracks. These aren't just normal market fluctuations, they're warning signs of structural problems. For the first time in history, we're seeing a global phenomenon that even veteran economists find alarming. It's called a yield curve inversion, and while that might sound technical, its implications are anything but. This is like seeing storm clouds gathering simultaneously over every major financial center in the world. Now, here's where things get really interesting. What if these crises aren't just happening to us, but are being orchestrated? Central banks worldwide are pushing hard for new digital currencies, CBDCs. Could these mounting pressures be part of a larger plan to transition to a new monetary system? Major economies are carrying debt loads that would have seemed impossible a generation ago. How do you deal with massive debt? History shows us one consistent pattern: countries often resort to dramatic currency devaluation. It's like trying to shrink a mountain by changing your measuring stick. While governments experiment with digital currencies and juggle debt, something interesting is happening. Central banks are buying gold. Not just a little, they're buying it at record rates. Why would they do this if they believed in the current system's longevity? Physical precious metals have survived every financial crisis in history. They can't be printed, they can't be hacked, and they don't depend on anyone's promises. In a world of increasing uncertainty, their appeal isn't hard to understand. We'd been here before. The 1930s saw a major restructuring of the global financial system. The 1970s brought another significant shift. Each time, the transition was marked by instability, uncertainty, and ultimately transformation. So what does all this mean for you? First, understand that we're not just experiencing normal market cycles. We're witnessing a historic transformation of the global economic system. Second, while this might sound scary, remember, knowledge is power. Throughout history, some people have not just survived but thrived during major transitions, usually those who saw them coming and prepared accordingly. Here's what you can do. 1. Stay informed and alert. 2. Consider diversifying your assets. 3. Think critically about official narratives. 4. Build resilience in your personal finances. Remember to like and subscribe for more insights into these crucial developments. Drop your thoughts in the comments below. I'd love to hear your perspective on these changes. Until next time, stay safe and stay prepared.